Hey guys, this is Christopher with Azalea City Tax and Accounting. I want to do a quick video today to show you guys the major changes with standard deductions. Trump's major changes. Alright, let's take a look at the primary changes. Standard deductions have increased. Personal exemptions have been eliminated. And itemizing won't benefit most people anymore. So we're going to look at each of these three things in detail. Alright, so first, side-by-side comparison. 2017, you had your standard deduction plus your personal exemption. That's the number you see here. 2018 is strictly standard deduction. There are no more personal exemptions. If you were single, then you're looking at a benefit. Your standard deduction is simply higher. Head of household, assuming one dependent, it's a little bit higher. Married filing joint, assuming one dependent, it's a little bit lower. So you can see, real quick overview, depending on how many dependents you have and what filing status you're in, depends on how you get affected. So, who is going to get affected and who's going to get affected what way? Well, single filers are going to benefit. Filers without children or other dependents are going to benefit. Filers who do not itemize deductions are going to benefit. Lower and middle income filers are going to generally benefit, except when they have more than one dependent. Why is this? Well, dependents used to be worth $4,050 in 2017 per dependent. That is how much your income would be reduced by. That was the personal exemption for each person on the tax return. That is gone now. So whereas before you could total up a very large amount of personal exemptions, that's gone. You simply have the standard deduction. You simply have the one set number regardless of how many dependents you have. So if you're single, if you don't normally have many dependents, then that new number, like we saw back here in single, it's bigger. If you're head of household and you only have one dependent, it's bigger. Married filing joint, if you did not have a dependent, because this number is assuming dependent, if you didn't have a dependent, it's bigger. All right, so that's who's going to benefit, those without dependents or with very few dependents. All right, filers who do not itemize. To itemize, you must exceed your standard deduction. Okay, so if you don't itemize, you don't normally have itemized deductions, then this isn't going to hurt you because there's not now this higher amount that you have to exceed. You're simply getting your standard deduction increased. It's not eliminating your ability to itemize. We'll talk about that a little bit more on the next slide. All right, but filers who don't itemize are going to benefit. Lower and middle income filers, think of that this way. If we give an extra $2,000 deduction to somebody who makes $1 million, that's a very small percentage of his income we're knocking off. Lower and middle income filers, we give someone making $30,000 an extra $2,000 taken off their income. So relatively much larger chunk of their income being reduced, and it helps them to drop down into lower tax brackets more quickly. Okay, so lower and middle income filers are going to tend to benefit from this. Okay, so who takes the biggest hit? Filers with multiple children and dependents. You have 3 children, you're used to getting around $13,000 right off the top, taken off because of those dependents. That's gone. Those 3 personal exemptions you'd have for those dependents, it's gone. Trump did away with them. Forget what we do or don't think of Trump. This is what Congress passed. This is the new tax law. Is what it is. This is what we have to deal with. So if you have a lot of children or dependents on your tax return and you're used to having this huge personal exemption that knocks your tax liability down, that's gone. Okay? Filers who itemize. Well, you used to have to only exceed a smaller standard deduction. Okay? Now you have to exceed a higher standard deduction. Think about what it is for married filing joint. It's $24,000. You have to have more than $24,000 in itemized deductions as a married couple to be able to itemize. As a single person, you have to have more than $12,000. It's going to be a lot harder to itemize now because you have to exceed a higher standard deduction. So be prepared for that. Be prepared for some of your charitable giving, your work-related expenses, your mortgage interest to benefit you absolutely not at all on your tax return. Okay, on your federal tax return. State, it's a whole other story. But on the federal tax return, be prepared for your itemized deductions not to help you anymore. All right, guys, this was just a quick overview If you have more questions, if you would like to know how you're going to be affected by these new tax laws, keep checking out our blog at azaleacitytax.com. We're trying to cover each of the major areas where things have changed, or give us a call. Our contact information is on our website. We're located on Schillinger's Road, right there at Hit Road, down from the Target. Come by and see us. We love walk-ins. We'll take appointments. You can call us, email us, whatever you'd like to do. Get in touch with us. We'd love to answer your questions. We don't charge you anything to answer questions. Thanks, guys, for checking out the video. We hope to hear from you soon.